Hello too, this is my update analysis of DIA. Like I said, it looks like DIA is now trending upward. As you can see, using these two tools here, the MACD and the stochastics, recently the stochastics reached the oversold condition, which is this red line, actually went below it. And since then, it's been trending upward. Same thing with the MACD. This red line is a signal line, and once the blue line crosses over it, that indicates a bullish trend. And as you can see, recently since that low, the prices have been on an upward trend line. It actually looks like it has broken the downtrend that has been in place since January. Uh, Today we have our first solid break above that trend line. Actually, confirmation. Yesterday we broke above that trend line, that downward trend line, and today was our first confirmation day of that yesterday's break. As you can see, DIA has been in a bullish trend up until January this year. If we look at the weekly chart, we can see that it extends way back into 2016. Every time when the stochastics went below that oversold or near it, the price then rose significantly in the bearish direction. Back here in 2016, again, we have an oversold condition. It crossed back above it, and then it went to bullish mode. We just had the most recent cross down into that oversold territory, and now we're getting an upward move in price. And if we go to the hourly chart, we can see that even more, how we got that break above the trend line yesterday, and then a confirmation today where it closed the second day above. And it's been in an upward trend since early April. Now, looking at my software, we show that this price move for DIA. My software generates a pre-computed price and time range. So sometime between June and October, we're looking at DIA to reach 275. That's based off of that wave 3 high. Now I can use some of the tools to produce that manually, and by doing so, again, if I can get the bar placed correctly, it's showing that DIA could reach 273, which is only about 2 points different from what my software pre-computed. Now I can take any of these lower highs, and if I go with the previous high, which is there on February 26th, my software shows potentially DIA could reach 265 sometime as early as April, which we've already hit that time frame. The next midterm is at vertical bar, which is in June. So, or it can go out into August. So if I was to put in a June trade, we will see what strike we could find. So again, going with one of my other software, We're going to go with the DIA, and looking at the June, we have 1, 2, 3, 4, no, 3 potential weeks that we could choose from. I'm going to go with the June 15th because it has the most number of strikes, 137. So that's the most liquid week in the month of June. Again, this is the number of strikes, 137. The days to expiration, 59 days. So just under 2 months. So if I hit update and then go down, and my software will show several strikes. The ones highlighted here in yellow are the strikes which will double with the smallest move in the stock. What I usually do is look at this column here, which is the delta, and that tells you the percent move in the stock in the option per $1 move in the stock. So usually I like to go somewhere with a delta between 30 and 35. If I was to pick the 34 delta, which is about close to 35 as I can get, it would cost me $2.91 if I was to buy that full price. So buying one contract there, hit the risk graph, and my software will generate the risk graph for that strike. And here we go. We got the June 15 expiration 253 call for $2.91. Of course, one contract, you have to multiply that by 100, so that'll be $291, which this shows the entry debit. Since we're looking for DIA to go up to 265, we can go here on the side, and as I go across these lines, you have a pop-up window which will give you the profit of that position plus the price of the stock. So 265 here will give a profit about 1020. So one contract at 1020 potential profit divided by 291, that's a 300% profit within 2 weeks time. So I like to put your positions on for less than $500 since you have a small trading account. So $500 divided by 291, that's one contract we can buy. 291 times 2, 582. 500 is the limit I usually like to go, but $82 is not much. I could put on 2 contracts for you, but let's leave it at 1 contract. This is a trade that I'm going to put on for you tomorrow. If I can get that price at $291 or less, that'll get you into the trade. 59 days, well, tomorrow will be 58 days. And in less than 2 months, you could possibly make 300% in this position. So if you have any questions, let me know, and I'll talk to you later.